Hey guys, Kill Stokes here. Welcome back to the channel. Today's topic comes straight from you, right? A bunch of you asked for a deep dive on the fixed volume profile tool. So that's exactly what we're going to do. So here's the game plan. I'm going to show you where to find the tool. We're going to talk about how to draw it on your chart, how to customize it. Then I'm going to walk you through my own journey from being totally against volume in the Forex market to someone who now uses it as a core part of my everyday trading. And of course, I'll finish by showing you exactly how I use the tool step by step in real market conditions. So if it sounds like something that you're interested in, do me a favor, take out a notepad and begin to take notes, or even better, whip out a chart, or I guess not whip out, load up a chart and follow along. And hey, do me a quick favor. Smash that like button to show your boy some love. Subscribe if you're not subscribed already. Lots of awesome content on this channel. And if you're new and have any newer trader questions that perhaps you're embarrassed to ask other places on the social media world, because social media is a horrible place where you get ripped to shreds and made to feel like an idiot, this is not one of those places. Feel free to leave them below. I'll certainly address them in the comment section, but if it's a good question, if it's a common question, I'll do a video for you as well, just like this. All right, so hold on tight and let's hop in. It's supposed to be like a time machine or something. I don't know. Whatever, we're going in the charts. So let's start off by addressing the first question and the most basic question of them all. Where do we find this indicator? And there are two places and also three different types of indicators that are very similar that we can use. And I'll walk through them one step at a time. The first one is going to be over on our drawing tools. So the left-hand side of my screen, if I click the little area right above the paintbrush, you're going to see it's going to take me to a drop-down box. If I go all the way down here, you can see that I'll find fixed range volume profile. I'll click that right now and we'll just do a sample draw on. I'll take this swing high right here to this swing low, and I'll go over how to draw them on or why we draw them on later. But you can see that it brings the indicator or the tool onto my screen. The second place I can go to is the indicator tab. If I go up here and I click in or type in fixed range, you can see fixed range volume profile shoots right up. And once again, I can take that same range right here to right here, draw it on, and boom, a slightly different indicator is going to appear. Now, which one you want to use may or may not depend on what market you're trading, but the main difference I see is this. If I double click on the most recent one, the one that I grabbed from my indicators, right, it's going to take me into my different settings, and I'll go over some other tweaks that we can do in the settings later. But the main difference is that with this one, if I click the icon that says value, boom, you'll see that it actually gives me some volume values at this level where the other one does not. So if that is something of value, no pun intended to you, you may certainly want to go with the one that comes from the indicator tab. Now, real quick, just so we don't get you guys confused, because I know you've seen a lot of my videos and you say, hey, Kale, that looks slightly different from the one that you use. The one that I use actually is going to be the anchored volume profile tool. So same box right here, just right under fix is going to be anchored. And essentially it does the same thing. It just anchors it to specific points for me. So it's like a quicker way of doing it. So if you're someone that wants to take a very specific range, the fixed range is going to be better. If you're someone that knows you're measuring kind of the most recent swing high to swing low, something like that, the anchored one is going to be beneficial for you. But essentially they tell you the same story. So that goes into our next topic. How do we draw it on? Well, when I'm looking for levels of volume, what I'm doing is I'm looking for levels of interest in the market. And I'm typically doing that at a previous swing or throughout a different, a very specific section of the market. So let's say that I want to measure, I'm here Apple into 15. I want to measure the volume, we'll stick with our same swing, between these highs, these recent highs right here, and these recent lows right here. Well, this is the range that I'm going to draw that profile on. So again, if I go to my drawing tool over here, click, we'll go with the fixed rate right here. I'm going to drag it from my swing high to my swing low, and it's going to give me volume indications throughout this zone. If I wanted a different zone in the past, let's say I wanted to go this recent swing right here, I'll go swing high to swing low right there, and you can see it gives me very specifically within that range. Now, the fun stuff customizing it. In order to customize this indicator, what we want to do is we want to double click on it, and you're going to see that there are lots of things we can change around. I'm not going to mess with all of them. I encourage you to experiment, and before you ask, Akil, what is the perfect setting? There is no perfect setting. If you've ever watched one of my videos, you know that my philosophy when it comes to indicators is this. The default setting is not the best setting. The thing with indicators is that indicators are tools that support what we're doing on the chart. Therefore, our indicator settings should be based off of what we want it to support on the chart. And that could sometimes means finagling it and mixing it around some in order for that indicator to tell you what it wants to tell you. So wanted to get that out of the way before you ask, but a few things that we can change here is the row size. So the row size is essentially how thin or thick these bars are right here. If I take this row size and go to, let's say 50, it's going to give me wider bars, less bars, wider bars. I can do it even more. Let's go to maybe like 10. These things should get really, really thick, but that is what's going to happen when you play around with this this row size. Vice versa, if I want something very, very small, if I want lots of bars to give me kind of a more precise look at very specific ranges, I can go to something like 400, and you can see it's going to give me a nice small little area like that if I want more precision instead of a wider zone. The next setting we want to play around with is going to be we can do value area volume. Now, value area volume, essentially what this means is you're looking for the area which has the blank percentage of the volume, and whatever number you put in here is going to tell you what that area is. So it's hard to see right now, but you can see that there are kind of parts of this volume that are faded out and parts that are more bolder, I guess you can say. So the setting that's on right now is showing me the area which holds 69% of the volume. If I wanted a bigger area, if I want to show you what, if I want to show what holds 90% of the volume area, I would do that. And you can see pretty much the whole area except for this little bit at the top is lit up. Vice versa, if I only want to see maybe 10% of the area, you can see that now, right, all of this is kind of faded down and my focus is only on this 10% area right down there. So not super important, but it can give you some visual assistance if you like it. Now, style is the next one. Again, you can click on and off for values and numbers if you want that on here. The main things I want to focus on in this area, aside from like custom colorizing, that's always fun, but not necessarily, I suppose, is these areas right here. The POC, this is going to be the point of change. And essentially what this stands for is the highest area of volume on the chart. So whatever this line is, right, this line is going to be at the area which holds the highest volume on the chart. So if you want to show that, click it on. If you don't want to see it, click it off. You'll see the spike out. When that spikes the deepest to the right, show that no matter what. So it's a nice little help of that area. Now, something else to support that if you want is going to be right below that, the developing POC. So this is more like a real-time adjustment of the point of change. So if I just click this on right here, and I'll probably make this, I don't need to make a different color. You can see that initially it was up here. And then as price continued, it actually became down here. And as this continues, this mark will actually change with price. So that's kind of pretty cool for keeping a real-time view at what that point of change area is going to be. So my journey to falling in love with volume was very interesting. I'll try to make this the shortest version possible because I know I can get long-winded. But essentially, I hated volume. I was 100% against volume in the Forex market. And whoever asked me about volume, I would say it to your face, you are dumb, you are stupid, it has no purpose. This was also during my stubborn ages of trading where there was so much talk out there that it was hard for me to kind of focus on the way I was trading because I would get influenced by everyone else. So I purposely told myself that I'm going to make a hard stand on the things I believe in. That way I wouldn't fall victim to kind of like doing the things I wasn't supposed to do. But what happened as I evolved as a trader is I continued to work on my continued education, right? So what that means is that instead of just being locked in with my mentors, the ones that taught me how to trade and the concepts that I fell in love with, I started having an open mind and wanted to rediscover and re-educate myself on some of the other topics that maybe I didn't invest as much time in, or maybe thought I'd have a different perspective in as I had a lot more experience. And surprisingly, volume wasn't one of them. I did a whole bunch of stuff. I did price action, I did structure, I did Elliott waves, I did all types of indicators, I did fundamental analysis. Volume was one I still was very, very, very against, until I had a very interesting discussion with Mike Bellafiore. Now, you guys know Mike Bellafiore from S&B Capital. They're friends of Tier 1. We're super, super, super glad to have them in our kind of corner. And usually we're the ones asking him questions. I remember Mike actually reached out to me and asked me a question. A lot of his traders use VWAP and volume in their stock trading. And I think at the time he was starting to develop like a Forex wing with S&B. And he asked me, hey, we're a little bit confused about volume. I know, Akil, you're a Forex guy. I blushed and giggled and all that fun stuff. He said, what's your view on it? How do you use it? And of course, being stuck in and dug in, I said, well, I just don't see a way to use it. And the reason for that is because, again, there is no central exchange in the Forex market. So like the stock market, for example, there is a central exchange. So all of the orders come through one place. So it's easy to track everything that is coming through. In the Forex market, there is no central exchange, right? There's all types of different ones. So the volume that I have on my chart only shows the orders that are coming in from my data provider, and not data provider over there, not data provider over there. So for me, I'm like, how can these numbers make sense? How can I trust numbers that don't tell me the full story? And this conversation sparked interest because I didn't have an answer for him, aside from I don't use it, I don't see a purpose for it, and I just kind of felt like a loser. I felt like, man, I wish I could have provided something more. This was the first time I was asked by someone I really look up to for my advice, and I kind of just like, I don't know, right? And it made me want to dive into it a little bit deeper. And before I got into the actual tools that I'm using right now, because I actually stumbled across the volume profile tool by accident, what I did was I really changed my mindset in understanding that, hey, although the Forex volume isn't the technical volume the way it is in the stock market, it's good enough, meaning that there's not going to be too many differences between kind of the volume that my data provider is giving me versus the volume that data provider is giving people. And more importantly, the way that I was using volume wasn't by actually looking at a number. I can care less what the actual number is. It's something called volume spread analysis, where I'm more so looking at the comparison of the volume with the candle. And as long as I am using the same data myself, I can make those comparisons without an actual number or without worrying about what's happening over there. So it was a slightly different way of using it. And I remember digging into a book. Let me see if I can find it. It's somewhere. All these books. Oh, yeah, right there. Book right here by Anna Cooling called A Complete Guide to Volume Price Analysis. Hopefully this is in screen. This is a very good book. I highly recommend it. One, it's a good book on learning what volume is. Two, if you were ever someone that was like, I think the markets might be manipulated. How do institutional traders or smart money manipulate the market? This is a good one for that as well. And three, I'm going to forget three. It's a really easy read, right? There are books that I have never completed, like reading price chart bar by bar. Where is it at? It's another book in here. I can't even find it. Good, because this one. This one, I want to break it. Dusty. Spiderweb incident all over again. But very, very hard book to read. Put you to sleep. This one's a very easy read, which was good. So I got through that book with the full intentions of using volume in your traditional manner, meaning that under the chart volume. So imagine your chart on the top. This is a video, I can just show you it, right? But the chart on the top, you have your volume on the bottom, and it shows you the volume bar by bar. Now, that didn't really work for my type of trading. This is another Forex specific problem. Because I am a swing trader who mainly operates on the 4-hour and 1-hour chart, many of my trades come at various times, right? Many of my trades can come during London, they can come during New York, they can come during Japan, Asia, overnight, who knows what. And the problem with using volume on that basis is that the Forex has a very cyclical nature, meaning that there are 4 main sessions, right? Again, there are your London, there's your New York, there's your Asia session, your Australian session, whatnot. And different sessions have different volume, different liquidity, right? London and New York are the two most popular sessions. So no matter what, the volume is going to be much bigger in those two sessions versus like Sydney and Tokyo. Therefore, it's really hard to make those comparisons from a candle that happened in Tokyo versus a candle that happened in London, because even if they're the same size, the volume is going to be different just because of the liquidity in the market. So it's hard to do volume spread analysis in that traditional sense in the Forex market, unless you're doing it on the daily chart or maybe like a very specific day trading period. So if I'm looking at the 5-minute chart, yes, I can do it because all of my candles will most likely be within that New York session. So I was kind of disappointed by that, but I was happy that I learned and I educated myself. And hey, at least like if I don't use volume, I can have good discussions. And when I say I educated myself, I literally, right after I read this book, I did it during the winter, my continuing education period, I focused on this for a full year, trying to implement it in my trading. I am very slow with making adjustments. I'm a consistently profitable trader. I've been doing so for a very long time. I am in no rush to add something that will burn down my house, right? So I'm very cautious with what I do. And after a full year of research, I was like, nah, not going to work. And when I was discussing it with some of my Tier 1 trading members, and this is the brilliance of a community, Tier 1 traders, I'm talking to you right now, you can get all smiley. I know that I'm your mentor. I know that I'm your coach. I know that you guys send me lots of emails saying how great I am and the role I played in your trading, even though you are doing the work. But I always say that it's just as powerful for me, because not only do I have a community to talk with, a community to bounce ideas off of, but it's like a mastermind group where you can spot things out that I won't. And I was playing with a specific tool, the volume profile tool, in one of my live trading rooms. I was like, hey, I was explaining my journey to our traders. I said, hey, here's another tool that we use in here, but I don't think I'm going to use volume at all. And I remember getting a message later that day, and it was like, Akil, based on how you trade and how you value structure, I think this would actually be good for you. And I was like, let me just give it a second thought. Because again, I was so blinded to a very specific type of volume. That's how I lock in on one thing, right? So I loaded it up, I reread it, and I thought about it. I'm like, you know what? This does make perfect sense. You know what I did then? Another full year of education in the market. I spent a full year like using it inside my trading and seeing if it actually made a positive difference and doing all the number crunching and all that fun stuff. And after a full year, it was something that was positive, and I decided to implement it, and here I am today. So that is my journey, the short version. I hope, as I look at the clock, and it's been like 8 minutes probably, of how I went from a volume hater to a volume participator. Now, with all that being said, let's look at how we actually use the darn thing. So let's look at an example of how we would practically use volume in our trading. And as I mentioned earlier, this volume tool is something that I've used in my trading. I've implemented it recently, and by recently I mean over the last couple of years. And don't get me wrong, it's not a complete game changer. It's not something that was a drastic change to my trading, but it was something that made me a little bit better. And as a trader, one who followed the Kaizen philosophy of 1% continuous improvement, a little bit better can be a massive help. And what it made me a little bit better at is projecting where price is likely to go. And that helps for both entries and exits. In this example, let's pretend that we are a trader that got long down here. So we were buyers down here after price, started reversing, and we're asking ourselves, okay, where is price action likely to go to? Where should I take targets at? Now, from a normal structure perspective, there are two levels that stand out for me. One is going to be this zone right there. Boom. The second one is going to be this period of consolidation right here. And this is a perfect example of where volume has helped me in my personal trading. Typically, when I have these two type of zones overlapping, I take the shortest one, right? I am a scaredy cat trader. I am not aggressive at all. I want to get out at the first sign of danger. So I would say, you know what, Akil? We're going to get out right below $1.40, even, right around here about 139.92. Now, I'm drawing this on for the first time, so I have no idea what effect the volume is going to have. But something that I now do in my trading, instead of just automatically saying, hey, you know what? Targets are off here. Let's kind of just measure out a little risk reward thing. Let's say I got long on the break of this candle right here. Stops were below. And I got a nice little risk reward that looks like that. Just a 1-to-1. So not anything to go crazy about, but gets the job done, right? Let's bring some volume on and let's see if this gives me a different story. So I'm gonna take my volume, I'm gonna take my anchored one this time, right above, I changed my things around, there we go. Anchored volume profile. I'm gonna draw it from the top right here to the bottom right here, and it should do it automatically because it knows what I like. Boom. And we're gonna see this. We're gonna see a little bit of a volume spike right here where we're initially trading at, and then you're gonna see a little bit of a void. And what I mean by a void is like an absence of volume. So remember, we wanna think about volume as being synonymous with interest. The more volume spikes there are, the more interest there is in that level. Interest is also synonymous with support and resistance. We tend to see support resistance consolidation at the levels where there is the most interest in the market. So high levels of support resistance consolidation tend to be high volume levels as well. And I look at this void as kind of being like a highway, right? When there is lots of volume spiking out, it is a busy highway. There are lots of cars. It's hard to move, meaning price action is hard to move. However, when there is a void, a gap like this, it's like driving late at night or early in the morning. There's no one on the road. You can fly. Price is able to cut through those levels a lot cleaner, like a hot knife through butter. There we go. It's lunchtime and I'm hungry and I'm thinking about a bagel. Anyway, so what I want to look for is I want to look for the levels that have higher volume because, well, just like support and resistance, usually these levels tend to be magnets that pull price action to them. So maybe in this particular location, I say, hey, my initial target is right here. There's no volume right here, right? So like the chances of price action going here are fine, but I can probably get a little bit more out of it and go right here where this little spike comes out. Or if I want to be more aggressive, I can even go to this level right up in here, right, where we have the biggest volume spike aside from our point of change at the top. And what that does is it just allows me to get a little bit more on my reward, right? So let's draw on another one. Risk is going to be the same, but now instead of my reward being right here with a nice little 1-to-1, because I was able to stretch that out a little bit more, I've just changed my risk reward profile to almost a 1.5-to-1. And that may not seem like a lot in this little trading idea, but getting a little bit more efficient, right? Kaizen philosophy, 1% improvement each and every day. Getting a little bit efficient, getting a little bit more on all of your wins, and even giving back a little bit less on all of your losses, because this can help for stop losses as well, makes a big difference at the end of the year when you're going through hundreds and hundreds of trades. So this is how I've used it to become a little bit better, a little bit more precise with my target taking in the market, or in general, just finding areas that I should be loading up my trading opportunities to begin with. Hope you guys enjoyed the video. If you have any questions or comments, leave them below. Hit that like button if you haven't already. Hey, a lot of you guys watch these videos. A lot of you guys are not subscribed. Why not, right? Hit that subscribe button. All it does is help you out. It makes YouTube know that you like my content. That way, when I produce more content, and I do a lot of videos and you guys miss a lot, right? You will no longer miss them because YouTube will show it to you and be like, hey, here is someone you like. You should watch their stuff, right? So do it. There's no downside of it. That's it. That's all I got. Awkward outro because I don't know what to say. Goodbye. Yeah, leaving.